Hello, tax fans. I'm Doug Bamford. I'm a lecturer in lifelong learning, and my special subject, as it were, is political philosophy. But I'm very interested in taxation and tax justice and things like that. And so I follow a lot of people online who talk about these things. And there's a bit of a debate going on lately. It's really been raging on the question of whether to introduce a net wealth tax. So a tax on the amount of wealth that someone has on a particular day of the year. And it's been a bit jarring for me because I've been seeing messages very strongly one way and very strongly in the other way. And so I thought I'd give a summary of what's going on here. And there does seem to be clamour for wealth taxes in the UK and possibly in other countries as well, where you are. But it's also getting criticisms from kind of people you'd expect who don't like tax at all and don't like government, and but also from sort of tax experts who are pouring a bit of doubt on this question of whether a wealth tax would be a good idea. So let's think about what to make of it all and look at the case for and against. And one person who's very credible on this, who's been writing against the wealth tax, is Dan Neidle. So he's had some very good interviews where he's explained why this would be a bad idea. So let's start though with the case against extreme wealth. So there's a group of people calling themselves the patriotic millionaires, and they are people who are saying, look, we're millionaires and we think that as millionaires, we're not taxed enough. And as patriotic people, we should be paying more tax. And therefore, since the government is doing it other ways, this should be achieved through a 2% tax on wealth over £10 million. So this seems to be the common proposal that gets bandied around by supporters of the wealth tax. Seems to have coalesced into this proposal. 2% on assets, so it's not a very high percentage rate, but that's normal for wealth taxes because wealth taxes aren't flows, they're based on an asset. So if you taxed it at 50% of the asset would be gone. And so if someone had, 20 million of assets, 50% tax, next year they'll have 10 million, the next year they'll have 5 million, and so on and so on. Whereas a 2% tax, actually, if you've got a lot of wealth, you should be investing it sensibly. You should be making more than 2% return on that. And so the wealth tax is just sort of taking back some of that return. So this is a common proposal, and several potential Labour MPs have recently been advocating for this. The popular, perhaps we might say even populist, economic commentator Gary Stevenson, he's been getting a lot of traction lately and making the case that the economic problems of today are actually largely caused by the increasing wealth of the very wealthy in society, maybe the 1% or something like that. And they don't kind of do the same things with money as the rest of society. And what their investments have been doing has been to push up asset prices. And that's been, pushing up house prices essentially, but people need housing. So that's just making it harder for sort of regular working people to get by in life and to afford housing and so on. So he's highlighting this issue. And another thing, which again bit jarring with other things I've been encountering at the same time. I've finally got around to reading this book, Limitarianism, by the Dutch philosopher and economist Ingrid Robeyns. Sorry if I've said that wrong. And she makes the case that actually the wealthy cause more harm than good, and that society should go as far as to set a maximum cap on wealth. They shouldn't allow anyone to have more than £10 million or euros or dollars because they're too different in value at the moment. So this is going way beyond the 2%. It would actually be essentially 100% tax on wealth above that 10 million threshold. She adds that actually, really, people shouldn't have more than 1 million, but that should be left to them. If they have more than 1 million, what they should do is then donate to charity or voluntarily pay to their government or something like that. Once they get to £1 million, then you've got enough to sort of to keep yourself living on the the returns from your £1 million, you can keep yourself living at a reasonable standard of life for the rest of your life, certainly if you're an older person. So she says once you get to 1 million, you should give everything above that away. But some people won't, and so the limit should be 10 million that people should be allowed. So this number 10 million is coming out in both cases. It's just a coincidence, though, I think. So why is there this increasing clamour then for wealth taxes? Why support it? And it's generally based on the thought that society has become too unequal in some kind of way, and that this inequality or the position of the super wealthy is causing society to function less well. So there's been some evidence put forward by, for example, Wilkinson and Pickett in the book The Spirit Level. And the argument there is that the more equal societies seem to function better than the less equal societies. And Robeyns makes some various claims. She points out this big one that's also found in other sort of liberal, egalitarian minded philosophers like Tim Scanlon. And this is that the wealthy people, they've got a lot of money and they've got very obvious interests in holding on to that money and being able to make more money. And so what they tend to do with it is use it to influence, and many would say go further and even undermine and pervert democratic outcomes. So they'll fund the parties who support their interests as wealthy people, and they'll interfere in the media as well. And we see that often the media is owned by billionaires and things like that. So that's a big concern. If you're concerned about democracy, then having very wealthy people, having high levels of inequality, really kind of set people against each other as like, the wealthy versus everyone else. And so that's one concern, a long-standing concern, that democracy and high levels of inequality are not really compatible. And another point that Robeyns makes is that the wealthy, their lifestyle is very environmentally damaging. They often sort of engage in conspicuous spending to try and show how wealthy they are. They take private planes like normal people might, take a taxi or something like that. And in fact, a lot of normal people don't even take taxis, consider that a bit of a luxury. And then as well, once you've got things like super yachts, constantly jetting around the world, there's a lot of sort of environmental harms associated with people spending a lot of money. Now, I think to add to that point, if someone was just spending all their money, then obviously they wouldn't be rich for very long. So these are people who are so rich, they could never even spend their money. If they're billionaires, at least, it wouldn't be possible. There's not enough stuff to buy. So they just own huge amounts of resources. They're not converting them into consumption like most people do. You get your income, maybe you save a little bit, but you've got to spend a lot of it on just your everyday living. The wealthy have got so much that even though they spend a lot, they can't actually spend it all. They can spend some on some of these environmentally damaging things that other people don't do, and they can spend some on interfering in democracy in ways that normal people can't do. So these are special things that they can do, which has social harms, would be the point here. And then there's another big debate, and this is whether the wealthy are going to do good things with their investments, and supporters of sort of neoliberalism or free market economics or whatever you want to call it might say that this is wrong. But the point made by people like Gary Stevenson is that actually the wealthy aren't using their money in socially useful ways. And I think that this is in Robeyns a bit as well, that you could really do a lot with this money rather than having it sit where it is. And so maybe, the government could do a better job here or something like that. Or just regular people if you redistributed it to them. And then there was that point that I mentioned from Stevenson that the wealthy are then going to push up asset prices. They're going to put their money in these things, and then that just makes it harder for regular people to buy them. And housing is the obvious one that people really feel. Young people, why are young people so unhappy? It's just because it's so difficult on the kind of earnings that they have to be able to afford housing like their parents and grandparents were. And so there's a bit of a sort of a generational discontent here. And in the background as well, I think that Robeyns makes a very good point, which is that the wealthy don't deserve their wealth. There's no way you can deserve to have £1 billion. Some people might try to make this kind of claim, but I don't think that there's anything in that. If we had a kind of a perfectly just economic system, then you wouldn't get billionaires, really. If there's big gains being made, then these should be spread around the whole of society. They shouldn't be concentrated on a few people. And so, one kind of argument here that is much more plausible, I think, and this would be the one that would make me think maybe we should have a wealth tax, is that there are wealthy people who are just undertaxed. High earning people might pay sort of 50% tax rate or something like that, whereas wealthy people pay a much lower tax rate. In some cases, as Warren Buffett once pointed out, he was paying a lower tax rate than his cleaner who was cleaning his office, because they have so many ways to reduce their tax bill. And so they're the people who are getting the most out of society. And although they might be paying quite a lot as a sort of currency amount, a dollar amount, a pound amount, or something like that, they're not actually paying a lot as a percentage of what they're getting. And they don't really deserve it and they don't really need it. So they're an obvious group to tax more highly. But let's then review and make sure we're clear on what the aim of the wealth tax is, because this might make a difference later. So, is the aim to just raise more money? We want the government to have more money. Regular people are taxed quite a lot, and so on and so forth. So, we want more money for the government to spend on important things. And the wealthy are the best source of this. And indeed, it's like the bank robbers claim, isn't it? Why do you rob banks? Well, that's where the money is, so I'll rob that. And so you might have a kind of an analogous point about, you know, government needs more money to fund all of the important work that it does. Let's get it from the wealthy. And maybe some people will make the argument as well that government will invest for the long term, maybe build infrastructure, invest in young people or something like that, and that will increase productivity in the long run. And so that's a better use than wealthy people with whatever they're doing with it to make a bit of money for themselves or to hog nice land, real estate, and conspicuous consumption and all this kind of thing that doesn't really help society very much. So the government will do a better job. Another kind of argument. And again, there's this concern that's a different concern, which is that, look, these super rich people are harming our society. They're causing these social problems. They're causing more environmental damage. They're causing damage to our democratic processes and so on. And so we need to reduce their wealth so that they're just going to cause less damage. And then final one, probably the one that would appeal to me really here would be just to say that the wealthy haven't paid their fair share. There's so many sort of loopholes and everything like that, and special things that they can take advantage of with their expensive advisors and so on, that they're paying much less than they should be. But other people might be highlighting more these other arguments. So it's worthwhile working out what it is that's going on. And maybe critics would also say, the real aim here is that it's just people who are envious of the rich and they want everyone to be as miserable as they are or something like that. So I don't have any time for that kind of argument at all, but that would be another one that critics would add to this list. It's all about envy. But I think that often supporters of a wealth tax, they mix these together as well. Maybe, and this is perfectly fine, they might have in mind that they want to do two or three of these things, or maybe even all four. Maybe not the envy one. Maybe the envy one. Maybe it's five. And so I think that we should bear this in mind that different people might want different things from wealth tax. And if you take out one or two of these things, your wealth tax argument might look very different. Okay, so what are the criticisms then? There's lots of them. One is that not many countries do this. The UK doesn't do this. The Labour Party looked into it in the 1970s. They were serious about it. They looked into it. It was too difficult. It's a lot of effort to calculate everyone's wealth. And you sort of have to do it for everyone, don't you? Or at least make a bit of a show of it, because how do you know who's got over £10 million or whatever it is until you've kind of tried to work this out and asked everyone? So you need to find that out. And so you need to work out where all the wealth is. And maybe that would be a good thing for society to work that out. But it would be a lot of effort to do it. and it would cause a lot of annoyance for people if they got asked questions about their assets and so on. And it's a very different kind of tax as well, in that unlike most other taxes, that tax is flows. So your income that you receive, that's a flow from different sources to you. But in most people's cases, that's from their employer to them. Other people might be more complicated, but in general, you're taxing exchanges that happen. It's an obvious time to tax people. When someone dies and their estate is taxed, that's essentially at the point where it's being transferred, isn't it, to the next people who get it. So this is how other taxes work. Net wealth tax is different. It's taxing a stock of assets as it's valued at this particular point in time. So there are other taxes that are on these flows that the wealthy should be paying. Maybe sometimes they are, maybe they're not currently paying as high rates as we might want. And so why not focus on closing all the loopholes and increasing the tax rates to make sure that the wealthy are paying their fair share through the existing taxes that we have? Because that's the problem. And so one argument for the wealth tax that we saw is that it's just too hard to do that. And so we'll have to do it through the back door through a wealth tax. But if that's your argument, then you're probably looking at a much smaller wealth tax, a much lower rate of wealth tax, because you're saying, well, we're just making up for the fact that we're just not able to do a good job of taxing certain kinds of wealthy people. And so the wealth tax is a backup for that. So here are the ones that, we've got. We've got an income tax, we've got capital gains tax, we've got inheritance taxes. So maybe through various taxes like these, they'll add up to taxing the wealthy as much as they should be when they're receiving the wealth and when they're receiving gains on the wealth. That's the important thing. That would be the best way to do it. But we're not doing that in all cases. So inheritance tax is described as a voluntary tax because any rich person is going to get advisors. They're going to give away their assets before they die so that it's just a gift. It's not part of their inheritance. As long as it's more than 7 years before, there's no tax due. So sort of give it away, maybe even put it in a trust or whatever it is you want to do so that you don't pay any inheritance tax. And in general, as I've said, the problem is when you try to tax some of these sort of things like capital gains at higher rates, you might discourage genuine investment. And so there's the push to lower certain taxes because you don't want it to distort people's decisions. And then what that means is that the wealthy end up paying lower taxes overall. So there's a back and forth on this point. And here's a big concern, right? The wealth tax, that first argument for it was that, look, the government could do with this extra money, think what we could do. We could build new hospitals or whatever it is, build new railway lines, invest in solar panels, whatever it is that, the government might do. There's plenty it could do. Would the wealth tax really raise that much revenue? And the problem with the wealth tax is there aren't that many wealthy people. Obviously, the lower you set the threshold, the more people get caught in the tax, but then maybe the less popular it is because people want to tax the really wealthy. And so you're talking about a few thousand people. And the worry is that if you try to tax them, they're going to find ways to avoid paying that tax. And so the big worry about taxes, or one of the major ones, is you introduce this tax and actually it changes people's behavior. So that might then have bad effects that you should really factor in before you put this tax into place. And so the worry here is that people will earn less. They'll think, well, I'll retire because what's the point in earning more? Because it'll just get taxed away with my wealth tax. So I'll just enjoy more time off or something like that. And maybe they'll invest less as well. Again, you might think, well, why just keep on investing in my company or in other companies I think are going to do a really good job of growing this investment? It's just going to be taxed away. Maybe I won't bother. On the other hand, you might think, well, if you've just got a load of assets, you're going to want to put them to good use, especially even if there's a wealth tax on it. You need to make more because some of it will be taxed away with the wealth tax. But there is a real worry that it will impact on people's decisions. And here's the big one. So, will very wealthy leave and take their talent, take their wealth abroad and maybe not spend it or invest it in the UK? They'll do something else. And that'll be bad for us overall. It'll impact the wider economy, maybe, and it might mean that you've introduced this wealth tax. It's changed the behavior of a small number of people, and overall, you've ended up raising less money because that's then had all these other impacts that mean that it's a tax that kind of undermines itself. So why then do the critics oppose it? Well, I mean, one thought is, well, maybe they're actually just paid off by the wealthy, the wealthy are funding these think tanks and all that sort of thing. I think we obviously take everything you read with a bit of a pinch of salt, who's saying this and why, but let's look at the real arguments here. So that last point was that we won't raise much revenue. The headline figures of just working out how many rich people there are, what would it generate if you tax them this much? Well, in reality, that's not a static amount that is available. If you try and tax it, the taxable amount will actually reduce. Another big concern is that actually the government doesn't do a good job of investing money. Politicians are profligate, or they want things that make them look good, even if they're not good uses of money. And so, rich people tend to be quite good at investing money. At least if they made the wealth themselves, they must be pretty good. If they're the children of wealthy people, they might not be so good. They might be no better than an average person. But then maybe if they're really bad, they'll lose their wealth to, friends who take advantage of them or something like that. So if you've got a lot of money, you must be at least reasonably competent at investing it. And some people just think the government is terrible at that. I think there's a degree of truth in this. There's a mixed record, certainly. Sometimes the government does good things, but not always. And so there's that worry then that this is going to have wider impacts on the economy. Maybe people won't bother trying to build their businesses and that sort of thing because they think, well, if I do a good job and if I make my business really big, it'll just get taxed away anyway. So what's the point? So that might have these bad impacts. And again, you could maybe put these together as well. So maybe sometimes the people who are paid off by the wealthy are actually making some good points that we need to bear in mind. So yeah, an argument's a good argument wherever it comes from. So a lot of the debate seems to be about this question of whether the wealthy will just leave. And then I guess in the background, is that a problem? Is that a problem for society? So will they find a way to not pay this tax? And then you're not raising the revenue, which was one of the reasons to have it. And so, what's the evidence on this? And the problem is that supporters of a wealth tax can point to some evidence that makes it seem like people won't leave if they're taxed more highly. And then the critics of the wealth tax can point to evidence that says they will leave. And they can both point a lot of holes in each other's evidence really and say, well, that's not quite the same as what's being on the table here. So both of them are saying the other one's wrong on this case of sort of the flight of the very wealthy. So I don't have too much to add to this. I guess as the academic, I'm sort of potentially coming in and giving the neutral view on this. I do think that probably the thought that there would be no impact on the decisions of very wealthy people, they've become wealthy for a reason. They often will have quite international lives. So I think to assume that it would have no impact would be a bit naive, but maybe it wouldn't be quite as bad as the critics would say. So perhaps something in the middle, but certainly you wouldn't get the full revenue that some people might be arguing would be available. So then you could add to that, well, maybe even if they did leave and you didn't make as much money from the tax as you'd hoped, that's not a problem because actually we just want to get rid of the wealthy people. So it would matter if you wanted to raise revenue, but if you think wealthy people are just causing problems in your society and you'd be better off without them, maybe house prices would drop if a lot of wealthy people left or something like that, then okay, that's no problem then, is it? But I guess in the background here, the point that Dan Needle is making is that it would be easier and better to tax the wealthy more using existing taxes rather than introduce a wealth tax, which is a big distraction and maybe sounds good, but wouldn't be so great in practice. And I think that's probably pretty good advice overall. However, as we've seen, that would be assuming that your aim is to raise revenue. But if your aim is a different one, to sort of kick the wealthy people out, essentially, or just make it so they're less wealthy, so that you wouldn't have ultra wealthy people in your society, then that might not be a problem. Now, the worry would be that a lot of those social problems would still be happening, right? You still have ultra wealthy people in other countries causing all these harms. They could still influence your democracy from outside, maybe. They would find ways to do that. Maybe that's increasingly easy in a globalized world to cause these social harms, and they leave your country. It doesn't really help you out that much. So that's a sort of depressing thought. And I think that one extra point I would raise is that a lot of these arguments about progressive taxation, often the response is it's not going to work because people will just leave, or the investment will go somewhere else. And obviously, the ultra wealthy are particularly in a good position to play off different countries against each other to their advantage. And also, corporations as well are very sort of fleet footed. They can move around things like their headquarters very easily, and they can move their investments a little bit more difficultly, but they can still move them around. And so, really, a lot of these problems, if you want progressive taxation, if you want to avoid the situation where wealthy people are just increasingly just sucking wealth out of society, and moving it to sort of places where it can't be touched, if you're worried about that's the way things are going, and I worry about that. I'm not sure we're quite there yet, but there's certainly trends in that direction. And in that case, the response is going to have to involve international cooperation, because that's the only way that you're going to be able to effectively tax. I mean, I'm saying the wealthy here, but just the things that it makes sense to tax, where people are making money really easily without doing very much. That is the perfect thing to tax. And it's also very hard thing to tax in our international environment. So I think that progressives should be putting a lot more effort into looking at these international agreements and that sort of thing. But the problem is, it's not sexy. It's not attract. People want to just, bash the rich and that sort of thing. And I think people don't want to do their homework. And I guess my argument at this point would be that we should, as citizens, want to be informed about what makes sense when it comes to policy. Democracy works when people are well informed. And taxation is famously complex because it relates to so many things, law and economics and all that sort of thing. So it's very difficult. And so people want easy answers. And those easy answers are almost always the wrong answers. They're terrible ideas. And so I'll put in a plug at this point, a little advert, if you will. I've got a course called The Political Economy of Taxation. It's an online course, and it talks about the ways to think about tax policy and the things you have to bear in mind if you're proposing tax policy, and some of the major issues. And then you get a chance to discuss something like the wealth tax and what the pros and cons are and whether you think it's a good idea or not. So it's a really good way to see what experts think about this and make sure that you're thinking through the right things, the relevant things when thinking about tax policy. So that's my little plug. That's what you can do. You can look at that tax. There's also loads of really good stuff out there and people explaining these things well. And Dan Neidle, I think, is doing a really good job since he's set up his consultancy, charity business, whatever it is. And so I recommend following him and seeing what he's up to. And I've got a blog where I list some of the good lectures and things like that that you can watch and videos that explain these things. So you can learn it with me and other interested people from around the world and learn a lot. But you can also do a bit of work on your own. You can do both. So yeah, I really hope that people take the issue of tax seriously. Don't just leave it to the experts and the well-funded think tanks. Really put the effort into understanding the system, how it could be better, where it's failing to tax the fortunate who should be paying more in tax, and how we can do that in a way that isn't just self-defeating and ultimately a waste of time. So thanks for listening to this point. Yeah, hopefully maybe see you on one of my courses. I do other courses as well, or another video in the future.